I'm Greg Fairchild. I teach in the Strategy, Ethics, and Entrepreneurship area at Darden, and I'm going to talk to you a little bit about a sequence of cases that I've been developing over many years that involve the question of how one grows businesses in the places that are overlooked. I'm reminded of that famous New Yorker cartoon, of the New Yorker's view of the United States, with Los Angeles and San Francisco on one side, New York, and everything in the middle being empty. And while that was a joke about certain people's views of society, in a similar sense, I think there's a view of entrepreneurship, that entrepreneurship happens in Route 128 and happens in Silicon Valley, but doesn't happen in small towns and communities around this country and outside of the U.S., and that it's these flyover places where I'm most interested in figuring out how people grow firms, how entrepreneurship is developed. Places where venture capital may be in short supply and even banking capital might be in short supply. How one actually grows a business, a strong, resilient business in those places are the questions that interest me. And increasingly, our students are coming forward talking about their interest in content that in some way talks about these underserved areas, underserved markets, overlooked markets, because of the great opportunities that are available for those who succeed in those places. Now, I have a number of cases in this set, but some of these come out of my work through a research grant that I have with the MacArthur Foundation. The John D. and Catherine T. MacArthur Foundation is an organization many people know from listening to the public radio. But what it also is one of the largest foundations in the country, and its commitment to building businesses, building communities is central to the foundation's work. They became very interested in my research work, again, in these areas that had been overlooked, and my case materials that I developed were also a big part of what interested them, and I've continued to do those. So an example of the cases in these sequences might be ones that would include my case on the building of a series of tutoring programs in failing schools, tying into some government activity through No Child Left Behind. A group called Platform Learning is looking to develop a company that would tap into some government dollars and also some private dollars to offer a new tutoring offering for young people. And they meet up with a private equity firm who's interested in funding that activity. And the case talks about the questions that the private equity firm has about the business. And in fact, there's a wonderful backstory that occurs in real life in the story. And so the debrief has some illuminating elements for students. Another example of the type of work that I've been doing in this area would be a series of cases that talk about community development financial institutions. This word CDFI is a mouthful, but what it really is it is about financial institutions, largely $1 billion or less in asset size, who go out and, through a combination of government dollars, foundation dollars, and actually dollars coming out of religious institutions, go out and provide capital. That could be lending capital, that could be risk capital, that could be credit, but it also could be depository, that is bank accounts, checking accounts, savings accounts, CDs, to communities that might not otherwise find that type of access. And so some of these cases deal with these organizations as entrepreneurs. Latino Community Credit Union is about one of our nation's fastest growing credit unions. In 10 years, this credit union in North Carolina has grown to 8 different locations and 50,000 members. And they specialize in dealing with the immigrant community, largely Latino immigrant community, who might otherwise go overlooked. This is a neat case that also ties into how this organization is configured, the history of what it thinks about, and a key decision point for this organization around whether they will offer a credit card to their members. And there are a couple of different vantage points in which the discussion can go. One of these is whether credit cards themselves are a bona fide social good. We can think of some ways that credit cards would be helpful to people, especially low-income people. We might think of some of the dangers of credit cards. At the same time, the case turns on some questions of who and how you underwrite a set of people for credit who might not have credit histories. Some questions about what you do when you're dealing with new American or immigrant populations. The case has a wonderful social mission in that there's a wonderful discussion about the provision of of financial services and whether that in fact does influence people's lives in positive ways. One of the big things that actually having a bank account does, beyond protecting people through savings, is that many people who are getting paid in cash or are cashing their checks every Friday are very known targets for crime. And the creation of this credit union has actually led to a decrease in crime and an increase in housing values in the areas in which they've opened branches. And the case goes into some of those things in the debrief. The third of these is one that's called Filling a Hole. And Filling a Hole is about a case that describes an organization in Philadelphia called the Reinvestment Fund. The Reinvestment Fund is one of our nation's largest community development loan funds. And this particular organization does a number of things: fresh foods finance, alternative energy finance. But in this instance, the case describes the interaction of a loan officer who's actually cobbled together a very large facilities loan for a new grocery store in an area in Philadelphia that has heretofore declined precipitously. And this organization, the Reinvestment Fund, which actually has a very interesting history that's described in the case. One thing being, the original money that actually created this organization came from the pension fund or the retirement fund of a set of nuns who really believed in the mission of this organization. It's now a loan fund of over $1 billion and operates in a number of states. The case describes that history, but then focuses on this one moment in time wherein the organization has worked with Dr. Leon Sullivan's Community Development Corporation in Philadelphia. And there's a wonderful history of Leon Sullivan and inner city Philadelphia, his initiatives there. And these two organizations have partnered to the creation of a grocery store. Grocery stores provide not only the access to food, but in this case, fresh food. Food that doesn't have the sodium, doesn't have many of the problems that people find in many of our rural and urban areas where they don't have access to green vegetables, as an example. It's a high-quality grocery store in an oft-overlooked neighborhood. And the case talks about the lending process that's involved, but then also focuses on how this organization goes beyond simply pricing a loan, setting it up, and then taking in the revenues. It talks about how this organization and the lending officers there continue to work with this community-based organization to move forward in finding the right contractors, developing the right place, and then there's an environmental abatement problem. In many urban and rural low-income areas, you deal with a secondary problem that these are places where manufacturing or other sites would have existed before, and there turn out to be environmental abatement issues. And that occurs in this case. And the question for the loan officer, who is the protagonist, is what he can do to help, and should he help, and what are the costs associated with helping. And it puts a new slant on the field of banking and lending, which I should say, in times like the present one, people have questions about what banks do and the good that banks do. And this is the type of story that our students resonate with quite a bit.